Yo, what's up, family? Welcome to the very first Bankz meetup for the year. This is where we break down the charts, dissect the markets, and most importantly, help you guys become and more confident and profitable as a trader. Now, I appreciate each and every single one of you guys that's been pulling up here tonight. Whether you are new to trading or already deep in the game, trust me, you're gonna walk away from this session with some real gems that you can apply to the charts immediately. So, real quick, before we go ahead and get started, I want you guys to drop in the chat. What is your biggest challenge in trading right now? Like, is it increase? Is it exit? Is it risk management? I want you guys to let me know what is like some of the most biggest challenges that you guys are currently facing at this current moment. Exits, precise entries, taking profits. Okay, cool. So, tell you what, here's what we're gonna be going ahead and doing here tonight, right? Tonight, we're going to be doing a live market breakdown. I'll be going through GBP, JPY, maybe US 30, and also some other pairs, marking up key levels and potential setups. From there, I will be doing something that I've never done before, providing you guys with a full strategy breakdown. I'll be releasing one of my core strategies that helped me along the way, and it also refined my entries. And this is going to be the 8 and 21 moving average confluence strategy. It's one of my very first strategies that I've actually, pretty much used in the beginning. And I think this is going to really help you guys out a lot in terms of finding those stellar entries, also being consistent on finding high quality setups. And then we're going to be doing a Q&A plus an open discussion where you'll get a chance to ask me anything, trading psychology, risk management, or how to improve your execution. So if you guys are ready, type a one, and we're going to go ahead and get straight to it. All right, cool. Let's go ahead and get it done, guys. So we're gonna go ahead and actually get over to trading view real quickly. I'm gonna go ahead and share my screen for you guys to go ahead and see in regards to that. Just give me one moment here. Let me just populate my trading view. That way it's like much more easier for you guys to actually see and look at. We're gonna probably be looking at GJ first and foremost, more than anything else. And then all we're doing right now at this current moment is just analyzing the structure, analyzing what's going on inside of the market at this current point in time. And then once we go ahead and do that, everything should be fine, dandy, and good. So just give me 1 second here. Put this here. All right, perfect. So quick question. Can you guys actually see my screen? Let me know. Awesome. So just give me 1 second here. I want you guys to just bear with me just for one particular moment. Just want to go ahead and let's fix like where I'm at on the screen here real quickly. That way we could go ahead and see the charts for what it is and such. But I'm glad that you guys are able to actually see everything here. Okay. So we're gonna go ahead and get started with GJ. This is one of my main go-to pairs now, especially how I've been so vigorous in terms of dealing with trading and dealing with a few certain things here. I had to actually take the time out to go ahead and find some more pairs that actually work inside my schedule. Okay. GJ is actually one of those pairs. Okay. So the main reason why I really love this is because I always like to have pairs that have structure, liquidity, and high probability setups. All right. So this is how I am. I am a technical trader. I add fundamentals inside of it throughout time, but predominantly I'm a technical analysis trader. All right. So we're gonna go ahead and get started with GJ. As I said, depending on the market, I may probably get into US 30 depending on what's moving. But we're gonna be identifying market structure, which will either be bullish or bearish, marking up the key levels, which is going to be the support and resistance zones, supply and demand zones. We're going to be highlighting the liquidity areas where we may probably see some form of stop hunt happening or so. And for those guys who actually trade ICT, I think you guys will know what that means. But for me, I look at that a little bit differently. So there's nothing wrong with that. And then also identifying a high probability trade setup in real time. All right. So you guys are following me so far, right? You guys have any questions before I start marking this up? Type of one if you guys just want me to continue. Fantastic. So typically here, guys, here's what I like to do, right? I like to see the bigger picture. I like to stand back. For me, think of me being on the charts as an artist. I have an overall idea of what I need to see first before I start painting up my charts, anything to start marking it up. I need to see the overall picture first of where I'm going, what I'm trying to do, and how everything else is going to go ahead and transition. So for me right now, I'm looking at the weekly and I'm looking at the monthly just to see exactly what's really performing here. Now, on a monthly perspective here, guys, I can see that the market has been moving inside of a bullish trend, we've been moving up and down, up and down, up and down. But I want to go ahead and start marking off these key areas. Now, the main reason why I think you guys would really, really, really love this is because on this particular call here, I'm actually marking and explaining a lot of things. I'm not just like, oh, follow me and hopefully you catch on what I'm actually saying. Like, no, we're gonna do some work here. All right. So I'm gonna try my best to keep this as concise as possible, but also try my best to keep it where it's not too long and your attention span is not, depleting so quickly. So I'm just going to go ahead and actually just draw out the main areas of structure that I think would be the most absolute best at this current moment. Preferably for me, I may probably just stick between these two areas here, these three areas here, just on the monthly time frame. What I can actually see over here is there is a area of resistance that price pretty much almost, tipped here before I started to come back down. So I'm going to also mark that area off too. And then I'm going to go over to the weekly time frame just to double check a few more stuff. Absolutely perfect here for me. So typically for me, I always like to just stay in between these support and resistance lines and everything that I've made. I like to use like quarter point entries too, and also look at where the support and resistance currently happening at the moment. So right now over here, we can see that there is resistance. There is resistance here. But if you look directly right on the right hand side of the chart, you can see all of this is also holding on a support. Type of two of you guys are following me so far. Now, being realistic about it and everything of the sorts, if I'm looking at all of this, it's going to be a few months before market actually ever come down to this area here or come down to this area here. Because remember, we're on a weekly. So I try my best to just stick to what really matters and what is really relevant. All right. So right now, yes, the market is currently inside a bullish structure on the monthly. Looking from a month perspective, I should just be buying. Now, analyzing what the market structure is going to be in between there, it's going to be something that we will have to go ahead and look at overall. Okay. So what do we mean by that? Well, I want to just focus on here and focus on here. These are the two areas and the two, main key factors for me based off of a monthly perspective. Now, I want to find the median between these two. When me finding that median, that's literally going to be me actually just using my Fibonacci, and I want to find that 50 percentile, area. Me find this 50 percentile area helps me out a lot because it really helps me identify what the weekly support and resistance area is. And if I was to go ahead and just drag all the way over here, let me just hold on this. You see that there is some form of, support and resistance happening on this particular area here that's holding on. All right. Type of one, if you guys are following me so far, just want to make sure you guys are there. So now that I've already done that and I've already identified the middle key structures between the monthly, and now I have like a little, area that shows potentially the weekly, my main two areas of focus is going to now be here and here. Okay. Simple as that. I'm not looking for anything else longer than that. This is the overall range of what I care about. These two lines here. And all I have to do now is I can just find the median of that once more. And the meaning of that is like either I can eyeball it or I can actually just use my Fibonacci, find the 50 percentile here. If I found the 50 percentile here, you can definitely see that the median between these two areas matches off on a level of support and resistance here. clean structure, nice, good movement. There's nothing more else I could go ahead and say about that in regards to this aspect. So now that I'm looking at this and I'm now focused on this particular aspect here, on the monthly, on the weekly, we see overall wise market structure has been bullish. But right now, we look at where price is currently, we're looking at a consolidation phase on the weekly time frame. Price is actually just moving with equal highs and almost equal lows. Type of 3 if you guys are following me on that part so far. So now that I'm actually currently there, I could then go ahead now and break this into more better detail, particularly for me, because now I can just focus on this particular area, know that this is a consolidation area, and I'll go ahead and identify my sell ranges and my buy ranges, and then I can go ahead and see where I should be trying to take buys and sells and do certain things in that capacity. In regards to this, guys, this is typically me just using a technical analysis and also my in-depth knowledge in regards to market structure. I'm not using a lot of tools. I'm not using my moving averages as yet. All I'm currently doing right now is looking at the flow of the market on support and resistance, understanding the higher highs, the higher lows, what it's supposed to go ahead and be if it's for an uptrending market, a downtrending market, what it's actually supposed to go ahead and be for a consolidation market, and see if it's remaining, if it's still following that structure or nature of whatever movement is happening. So here, I can always see where is the demand and where is the supply, right? Supply and demand zones are typically areas that formulate consolidations, and then you will see like a big spike up or down after that consolidation area has been formed. Like right now here, if you was to look at this particular area here, this would be in a sense a demand area because price went ahead and actually pushed up a few pips since then. I'm gonna go ahead and just bring this down a little bit just so you guys can see it a little bit better. And what I mean by that is if we look at the measurement of when price came inside this point here, you saw that price actually went ahead and moved for over 1,000, over 1,000 or 1,400 pips. The exact same, area here where we have a supply area. Supply area is here, which is the consolidation point. You see that market actually went ahead and touched inside this zone. Throughout this zone, when market went ahead and touched, it pushed price down for a certain price point. When it came back again, it pushed price down again over 1,000 pips. So you can definitely go ahead and say, hey, that particular area, sellers can be found. And then at the bottom, which is going to be this particular area here, buyers can be found. Do you guys have any questions so far? Are you guys following me? And if you do have questions, please, don't hesitate to either raise your hand, say, hey, I have a question. I will add you to the spotlight, let you go ahead and, ask your question, and then we'll go ahead and continue. All right. But hopefully you guys are following me so far, though. So one thing that I know about these consolidation points, there is, structure within structure. Typically, I like to find that little medium point where price is actually holding off on support and resistance and making its way, and where most of the lines are touching or where that's actually happening. I can do that again by either using a Fibonacci or I can just eyeball it based off of my years of experience. But I can see that at this current point in time, the middle line is literally like right around here, just by putting in that fib. So I'm gonna go ahead and just probably color code this or change this color code into probably like maybe a blue, just for like just for purpose sakes of hey, this is like that middle point. So theoretically, the way that what pips if I'm spelling it? What's pips if I'm spelling that right? LOL. Also, if you think I'll get down to the 3 line, eventually it will get down to the 3 line. So if we're talking about if it would get down to about 186, possibly this is what we're actually determining now to see how structure is going to go ahead and play out in regards to that. Now, what is pips? Pips means percentage in points. That's what it actually means overall wise, and that's why we call it pips. So theoretically, it's will be used to measure price, right? Everything's supposed to actually move inside a point. But if you notice, you'll see that you have 184.125 If it go from 125 to 127, that's 2 pips. Now, if it went from 184 to 185, that's 1 point. So just to let you guys know about that, if you did not know what that means. That's why if you look at US 30 moves in points, not pips. So that's why one point move is actually $1 on some brokers. So we went from 30,000 109 to 30,000 110. Price moved up 1 point, which is 10 pips by standard when it comes to measuring forex pairs. So just to let you guys know that. So forex pairs is pips, indices is points. So we're looking at this here. Like for me, typically, in order for me to actually really see things pan out the way I wanted to pan out for sells, yes, we need to see a lower high, but I need to see another lower low in order for this to actually happen. Right now, we're seeing a little bit more of consolidation, points happening here. We're also seeing price look like it's trying to make a higher low, trying to break back above. In order for me to now be really, really, really like saying, hey, I want to now continue to buy on this, I need to see another higher low hole around here in order for me to come right back around this area and probably make my exit out of. Because at that point in time, that's a high probability area where price may probably shoot back down due to historical data, as you can see here, happening, and it causes price to shoot down based on sellers being there. If you know where you can find buyers and sellers, that's where exactly you should know where to enter and exit. That's the biggest gem I could give you guys. It's a matter of actually really understanding what it is that you're looking on the market and seeing in order for you to make those determinations. So at this current point in time here, all I can do at this moment is see between this level and this level. Market has not really given me any form of real data saying that, hey, we now pushing bullish or pushing bearish. It's another consolidation point. Type A2 if you guys are understanding that here. So this particular pair, it does consolidate a lot. It can sometimes be annoying if you don't know what it is that you're looking for. And that's why you see a lot of people be like, yo, they're kind of tired of cliche because they'll go ahead and actually buy, and then they'll go, and then when they buy in, it'll buy for a certain amount of time, and then it'll go ahead and sell. And then when they try to sell, it's not selling for a long period of time, but now it's going ahead and buy. But when it really, really breaks out, then it's like, oh yeah, it's really moving. It's really like, time for me to get inside this and do whatever I have to go ahead and do and make those moves. So theoretically, I'm still, if I was to go ahead and stay on this area here, if you are a part of my free Instagram channel where I have those free ideas, most of the buys that I was calling off, it was actually being here, from this point here, following these structures. And this is why the exits would be here for me in order for me to get out. What correlations do you use with GPY, for example, JPN, and how? So believe it or not, guys, I don't do correlations. Never did. I'm not one of those guys that actually would be like, hey, I will look at the dollar index and see how gold is performing, all those different type of stuff. I don't like to keep my stuff I don't like to keep my stuff convoluted. I like to keep it very simple. And I like to keep focus on the task at hand, because there are some times that you may look at a particular pair or look at two pairs and say, hey, if this goes down, this one's supposed to go up. And there could be instances where they're actually flowing in the right, in both in the same direction. So they're not doing any form of correlation, or it may be like it's not like a full, it's moving up, this is moving down. Sometimes it's moving up, sometimes they're both moving down. And okay, if you're using that as your real crutch, you're gonna be losing a lot, because it's like, hey, what if it's not correlating? Then what? Sometimes some pairs do not correlate for a little while, or because of data, one pair may be extremely manipulated due to some form of fundamental news that's coming out, or particularly inside that nation, and you'll be like, wow, I don't know what to go ahead and do at this moment. But I've seen what people have used correlations and it helped them. But for me, I know what works for me and what doesn't work for me, and I stick with that. That's just something that I've came to the realization about. But to each his own when it comes to that aspect. I want everybody to understand that when it comes to this, it is not a one answer fits all type thing. That's why you have different styles. That's why you have different, versions. That's why you have different people who actually trade differently. Because remember, behind these screens are a lot of like-minded people, but they have different theories, different process, different systems, different things that they go ahead and do. But at the end of the day, there's still going to be buyers and sellers. And all you have to do right now is use a strategy or figure out how you're able to interpret the information and know when buyers are coming in, when sellers are coming in. Type of 1 if you guys are comprehending that. So as you guys can see here on the H4, you can see right over here that these are particular areas that price is actually pretty much, holding on for sells, right? The initial selling point pretty much happened over here, if I'm really being honest. This was it happened out over here. And the main reason why it happened out over there is because if you look right at this particular point here, you saw that the market did actually broke, retest, but here's what's the kicker part. It then went ahead and started making lower highs. Ultimately, it broke structure here, retested here, came down, give me a double top, and then went ahead and actually started coming back into that consolidation point, which is just bouncing in between, bouncing in between, bouncing in between. Type of 3 if you guys are still following me on that. This is where, you have to be able to look at some past data in order for you to really, 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 see what this actually is doing, what it actually means before you can actually go ahead and do anything else, right? You saw that there was a break and retest happening here. Market broke, retest, came down, double top, came down. Every time it came back on this resistance point here, came down, came down, came down, came down. So I'm just going to go ahead and actually draw out that particular area here on the H4 so that you can be able to see it for yourself. For me, Ben, I draw these rectangular boxes that that those dashed lines in between it is lines that I actually have for myself to use as a resistance point or support and resistance point too. All right. Like I said, I'm giving you guys all the sauce. Okay. You get all the sauce in regards to how I would normally operate, utilize, and move. Now, on this call here today, I'm not doing the whole skilling and entries and doing this and doing that. Like, no, I'm actually just helping you guys figure out how to find an entry, how to find an exit. You should be able to now take that, add on top of that, and literally become a successful, consistent trader by what I'm showing you here. Because literally it's not rocket science, if I'm really being honest about it. I thought it was when I first started off due to my lack of knowledge, and then also me not really taking enough time to really put into effect there. So that's something that I had to learn throughout the days or throughout the years, right? So one thing that I want you guys to really notice here is if you look at this blue line, I'm going to use this green arrow to help you. If you look at this blue line here, that's like the bottom part of the rectangle box, right? That blue line normally acts as support for me. That's my support and resistance line. If you see it, I already have it drawn out there. If you look at the very top, if I was to go ahead and actually just duplicate this, the very top is going to be my resistance line. And as you can see, price has been rejecting the top of this box. The middle part of the line can act as support or resistance depending on how structured things are actually being planned out or paid out. So if I'm inside a consolidation zone at this current moment, and I know that I'm inside the sell area, it's easy for me to determine if market could potentially continue to sell off by looking at these 3 lines here in the middle. Okay. And we're just going to keep it simple. We're not using none of MAs or anything like that. We're just leaving it as market structure. In order for things to actually go ahead and now break all the structure for me, then it's going to be somewhere where market actually, let me just go ahead and put this here. So in order for this to go ahead and break structure for me overall wise, right? it would have to be something where a market actually really go above here, breaking the resistance, and then it needs to come back down to either any two of these lines, so it can make another higher low point in order for it to actually now go ahead and continue upwards. Type of one, if you guys understand that. So if I'm seeing something like this actually happening here, right, I can definitely go ahead and say, you know what, I'm gonna buy or get into some buys. On the H4 time frame, I can see currently at the moment, market looks like it's a little bit, still inside this selling area, still holding off. We have this particular area here where price pushed down a nice amount of pips from Friday. And this was like about over 200 pips. Over here, we're looking at, price now coming down here, which would be, let me see it here, about 123 pips. So we're still seeing that, okay, sellers are still holding into this, still trying to push this, push this price to go down, push this price to go down, push this price to go down. We're still on the 4-hour, guys, okay? Now, there's a particular thing that I like to go ahead and do. I already know overall where I'm at. Overall, where I'm at right now in terms of price, I'm inside a sell area. This is going to be the buy area, but we also have different structure points to look at to see if price is going to hold off at support and resistance. How many of you guys are having issues with setting take profits and stop loss? Type a 1 in the chat if you're having an issue with that. So, to all those that's having issues with setting a take profit and stop loss, right? I want someone like, I want someone to really answer this question for me. Like, I want you to mic up and tell me, what do you think a take profit and stop loss is supposed to be? Like, where do you think you should be placing them? Who wants to come on the mic real quickly and answer that question? Type 3 if you want to do it. Cool, Michael. I'm gonna let you go ahead and come on. So I just asked you to unmute. Can you unmute yourself real quick, Mike? Mike, are you able to unmute or no? All right, no worries about it. Is there anybody else that actually wants to go ahead and answer that question for me or no? All right, Rashard, I'm gonna let you unmute yourself. I guess clicked it for you.
What was the question again?
Yeah, no worries about it. So the question is, right, where do you think you should be placing your take profit and stop loss?
Okay, so the stop loss should be depending on if you're going on a buy, like that the lower circle, orange circle which you have there. You said you wait for price to get down there to actually get a buy entry. So your stop loss would be under the wicks of that orange area. And the take profit would be actually up to the top area where the red line is.
All right, cool. That's a very good answer. Thank you so much for that. And yes, you're pretty much correct, right? But I want everybody to understand this when it comes to take profit and stop loss, and it's not a difficult answer at all. Your take profit and stop loss should be based on structure. It should be based on support and resistance. It should be based on that, exactly what like I said, support and resistance. So what do I mean by that, right? So let's just say, for instance, that I am currently trying to sell, right? Well, for me, I'm looking at this particular area here. As you can see, price has been holding on this area from this side here. And I'm looking from left going to right, by the way. So I want you guys to really understand that. If you look at this particular area here where price came up when it sold, it retested at this area here. So it clearly shows that there's some form of, buyers, sellers indication happening here. There's some form of information, like some form of movement where buyers and sellers are actually coming in. So for me, on the H4 time frame, that's where I'm gonna go ahead and start saying, hey, you know what? That's gonna be a stop loss area for me. All right. I mean a take profit area for me. Okay, cool. That's TP1. TP2 could be down here, where I have also on this particular area here. TP3 would be here, right around here. And then TP4 would be on the support line of the box. TP5 would be in the middle, and TP6 would be down here. Type of 1 if you guys understand that. All of my take profits from selling is going to be on literally all of the support areas of the market. What do I mean by that? Well, like I said, I treat this as if I'm drawing a painting. What is supposed to go ahead and make a downtrending market, guys? What is the two main components of a downtrending market? Lower lows and lower highs. Correct. So in order for me to now go ahead and continue to sell, I already know that it's going to hit a support. So if it's going to hit a support and I'm selling, I can start taking partials here or take a profit here. If I get a lower high, I could then go ahead and do what? Enter the trade again. TP1, hopefully it breaks, come back down here. I can either take profit again. If it doesn't, and I still go it, I can still continue with the flow structure of the market. Are you guys following me so far? May not actually be that clean, but that's, how I would actually go ahead and look at it. Shad, yeah, I know you have a question. You could definitely go ahead and unmute yourself and ask a question.
Yeah, quick question. Yeah, so if we're looking for a downtrend, right? So if it makes that low, we know we have a support down there before it tries to break. If it doesn't break the support and makes an impulse move down to the bottom side, that means we're still in buys or we're still consolidating.
All right, so what we're talking about here. Are we talking on this 4-hour time frame, this overall
Yes.
structure that gets through? Or are we talking about
Yeah.
just all the way down here?
No, just from that top structure right there, right down to that first level spot to the orange side right there. So if market doesn't retest up to the upside and then make an impulse move to break through that support, that means we're still in buys or we should wait for another confirmation.
I would definitely go ahead and wait for another confirmation because at the end of the day, this move has not happened as yet, right? Let's just
Okay.
say this is now. So if I'm being honest with you, I will actually be uh banking on these two areas protecting me. But this is on the H4 time frame. Remember, I'm just
Okay.
looking at structure on the H4. This is a lot of pips to be, having as a stop loss. But in
Mhm.
terms of structure wise, these are the two areas that needs to protect me from this trade from continuing to push up. Now, if
Okay.
price actually does break this area here or break down below here, technically, right? If I was to actually just remove all these little drawings that I have, this is the break of structure here happening here. Because remember,
Yeah.
there's
Okay.
a bit of support here. So if price moves down below, breaks below it, we should see potential, lower high. But this is why you're able to now take those partials or take those profits, and all you're doing is waiting to see if it's going to go ahead and provide you with that opportunity again. If it doesn't provide you with the opportunity again, well, what do you need to go ahead and do? Wait until you see a higher low in order for you to now go ahead and take a buy. It's just a matter of knowing where to enter inside the market again. And that's where I think a lot of people have that disconnect because some people try to hold on and then they hold on for their God sake, seeing that it'll actually go ahead and continue for them.
Yeah, that's kind of like my issue right there. So like if I was to take it from the second orange circle after the retest to go down to the orange circle in the middle, I would actually take profit there because I would think price wouldn't push all the way down instead of just like trusting and waiting, you know?
But that's where trade management come in too. So when trade
Okay.
management come in, you're able to actually now handle those trades and stuff too in regards. I'm gonna go ahead and let I think that's Mali or so. I'm gonna go ahead and let them go ahead and ask a question. Yo, you go ahead and actually unmute yourself. Let me just find you real quickly because um Let me see if I can find you because I have a few here. Oh, there you are. Hey man, what's your question?
Hi, Jayce, you good?
Yeah, what's going on, guy?
Yeah, I'm also not. I actually have a question. Did you see that area where we said we might get potential sales?
What this area here?
Nah, the one below.
This one?
Nah, the one in the middle, where the thingy, the pet starts. Nah, not that one. Up again. Yeah,
Yeah.
yeah. That just yeah. You see where we say about we might get potential sales. So how do you, if like it goes there? So how do you spot? But okay, now it's gonna go down, or like
Well,
for entry confirmation. That's
this
that's my
this
question.
yeah. So right now we're currently on a 4 hour time frame, right? If I'm really being honest, I would never just take a trade just basically on a 4 hour time frame. I would have to go down to a lower time frames as yet. So we haven't really reached there as yet to really go down to that information to see if it's really determining or not. Because there's always going to be structure inside structure, but I could definitely go ahead and answer that question for you in a few moments. But I guess was showing you guys on what I'm looking at for structure and what I need to see happen in order for me to continue with a sell bias. Right now, currently at this moment on an H4 time frame, technically or theoretically, this particular move here was supposed to make a higher high for me because this is where the higher low actually happened based off of structure. It made a lower high. Now, here we may look at price doing some form of higher low again and making another higher high. We're going to check on the lower time frames to see if that's going to really happen or not. But from what I can see here, it looks like if it's really protecting sellers at this moment and pushing price back down. But it's too early to determine on an H4. And that's why I need to go to an H1 time frame just to get some more information, and then the 30, then the 15, and then potentially the 5 for me to get entries on. Okay.
All right, I see, man. Thanks.
Yeah, absolutely welcome, bro. So let me just go ahead and actually pull that up real quickly here. So just to recap with you guys, right? I'm looking at this particular area point on the H4 just to determine what form of structure I'm looking at. And this is just based on if I am selling. All right. If I am selling and I'm committed to the sales and the sales are making sense, all of these different, lines that I have, put together here is lines that I would actually go ahead and do take profits at. So let's go ahead and just put a TP here. I'm going to put that on the right, put that on the middle, and let's go ahead and just put that as a 14, hit OK. And I'm going to go ahead and change this template and just save this as TP. And then what I want to do is I actually want to change the visibility on this. So I guess when I have this on hours between the 1 and the 4. And once I have it on the 1 and the 4, I'll go ahead and do that. Um, And let me just go ahead and do this here. Um, so boom. This is all my TPs that I have set up. Okay. Every single one that I have set up that I want to see if price is gonna go ahead and hold on these. Now for me, for me purposely, I would go ahead and actually and just to show you guys what I would go ahead and do. I'll add a little bit of uh add a little bit of a crossing down an alert on this. When I do these alerts, sometimes I can actually go ahead and put a webhook on there to actually post aside the platform. When I post that webhook in the platform, we'll actually go ahead and send some ideas out to the guys or to myself, letting me know. But this is the overall structure of what I want on the H4. It's clean. It makes a lot of sense. So I go to the H1. On the H1 time frame, as you can see on the H1, it looks as if it's still following that structure for me for lower highs. Type of one if you guys can see that and understand that. When we're talking about this here, as you can see, price literally was here, happened, 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 happened. came. It looked like it was trying to push up this one particular 1 hour candlestick. Look, it's holding off here, and it could potentially come back down. Okay. Boom. Now, realistically speaking, I already have all of my H4 TPs. This is going to take a long time for me to get to, long time for me to actually achieve, right? Looking at my overall standard right now, if I'm looking here and I'm saying, you know what, maybe I'm going to enter in on a trade here, I have a rule of thumb. My stop loss is always about between 30 to 40 pips, right? That's me. I see that's what I found work for me. You have to find whatever pips calculations work for you. All right. The main reason why I have a 30 or 40 pip stop loss is because I need to see if I can have some form of protection inside of my drawdown. If I don't have no form of protection inside of my drawdown, that means that the trade is already being a little bit too well gone, or I may need to just wait until something else come along again for me to take it. So for instance here, right? If I'm going to go ahead and take this trade here, right? I'm selling, right? Overall structure, the break pass in terms of, oh, the market is now bullish. It needs to go above here. Type of 1, if you guys, or type of 2, if you guys understand that. So at this current point in time, doing a measurement from here, I can see that this is about 70 pips. I can make that determination depending on my capital, on my cash flow, on how much I actually have available in order for me to go ahead and do that. But if I don't have enough cash flow or so, I don't want to put myself inside that predicament in terms of, oh, am I able to really hold myself from that drawdown? So even if I was to now go ahead and sell here, right? I always like to do a 1, 2, 3. Even though this is my H4 TP, this is pretty much a 1-to-1. All right. I don't think I want to risk 70 to get 70 pips. That's just not my overall aspect, my overall look on it. I don't think that's something that I really interested in doing. So here's what I will go ahead and do. If I see that's a little bit too big for me, I'll go to the 30. I'll go to maybe the 15, and I'll find something on the 30 or the 15 that may potentially, make sense to me to go ahead and do. So like right now, if I'm trying to just take it bit by bit, slow by slow, I could definitely go ahead and say, you know what? Okay, cool. On the 30 or even on the 15, I'm seeing that, okay, this particular area here is where price was supposed to. I'm going to go ahead and just change the color of it so that you can be able to have it. I'm going to put this as 15. Change the style. I want to go with blue. I want to go with a solid. I want to do a line. Bam. Right? So this particular area here, on the 15, you will see that price was actually literally, the resistance. It held off as support a little bit on this side here before this candlestick came down with it. But if you look right above it also, you'll see that this area here was also a resistance point where price actually broke the structure here of support, finally hit the resistance, and then came down. So now for me, I feel a little bit more comfortable saying, you know what, if I could hold on to the 15 real quickly here and it doesn't break past these two areas, I could potentially hold this trade, run with it, and see where it could take me. Now, at this current point in time, this is about 30 pips. 30 pips here, clean. I have enough room in order for this trade to actually breathe the way I want it to breathe. All right? Type of 3 if you guys are following me so far. Perfect. So I have enough room for this trade to actually go ahead and breathe. I'm not inside this trade actively. As you guys can see, we're doing this in real time so that you can be able to see how intentional I am when I'm looking at these trades and doing what I need to go ahead and do. We already identified on the H4 time frame. This is the TP that I want to actually have on the H4. Okay, based off of structure. Yes, there is other areas of support and resistance inside of this area here. Now, here's something that I actually go ahead and do, and this is another gem for you guys. I make micro take profits for the overall trade. So this is why I tell people, they don't believe me, but I say, hey, most of my positions and my entries are on a position swing like move, but most of my entries are on scalp like entries, where you see that I'm really in there on the wick or really in there before the move overall started by me finding the lower highs or so in terms of structure, and then I can determine if I want to continue with it, if it's going to continue to hold on to those natures of making uptrends or downtrends. Currently, right now, we've already identified on the checklist that the market is inside the daily consolidation zone. It's currently inside the sell area on the H4. We're seeing lower highs actually happening here. And we went on the 15 to actually see if there is some form of protection that we can have on the 15 in order for us to have a trade open and not be inside a lot of drawdown. We already identified all of that information. And this is why it allows me to now confidently put things in so I can be able to get it done. Okay. So here's what I want to go ahead and put here now. I've already identified my 30 pip stop loss. Right now, this is a 1 to 4, right? A 1 to 4 that I'm actually doing. What I'll go ahead and do is I'll do a 30 to see how price is structuring out. I have a level of influence here. My first 1-to-1 is actually holding off on a H4 support and resistance level. So I can say, you know what, okay, to myself, this is going to be, let's just say I call this TP1, right? TP1, I want to go ahead and put this as red. Perfect. Actually, no. I want to change this to maybe, I don't know, orange. I just want something dark. Just give me 1 second here, guys. Sometimes these like colors can really like, get me or whatever. Man, I'm gonna just keep it the way it is. So I have TP1. TP1 is showing me a confluence here because, like I stated once again, I have my take profit literally on an area of support, right? 60. I go down to a 60. Let's go ahead and look at TP2 on the H1. TP2 on the H1, if you look at it over here, you're seeing resistance happening over here. You see some form of support here. And I bet if I go to the 30-minute time frame, that support was here. The resistance was here. It's clean. Type of 1 if you guys see that. Perfect. Then I'll go ahead and go to TP3. TP3 is going to be me actually putting in 90. So it's just here. I'm gonna call this OTP, which is the overall take profit, right? Overall take profit of the trade on the H4 of what I want. But right now, this allows me to literally have a clean structure setup on the overall idea, and also don't be worried about drawdown. Type A4 if you guys understand that. And this is not me using my Fibonacci's. This is just me using market structure, support, and resistance. This is like some of the most basic level of trading. Like the most basic. A few lines, using price action, understanding supply and demand zones, being able to determine what's happening inside the market on these lower time frames. Okay. I haven't used well, liquidity to me is supply and demand zones. So that's just what I call that. All right. But literally, it looks like it's a clean setup so far, right? Really clean setup so far. On the 5, you're looking like we actually making some real moves here. So it's really, really decent in my honest opinion. All right. Now, I know that you guys actually got all that insight, all that information and such. And this is why really understanding how to actually find support and resistance, how to actually find supply and demand zones, how to draw these things out is very, very important. And you should take the time to really learn how to draw these things out properly so that it can be able to help you in the long run. Okay. Now, here, we're going to go ahead and transition a little bit. We're going to be talking about the 8 and 21 MA Confluence Strategy breakdown. So about this strategy, this is one of my go-to strategies for catching clean trends and sniper entries. It is called the 8 and 21 MA Confluence Strategy. It's simple, effective, and most importantly, consistent. All right. The strategy is all about confluence, meaning that we don't take a trade because don't just take a trade because of moving averages. We stack on confirmations. So I want you guys to write this down if you have time. The key components is market structure. If we are in an uptrend, downtrend, or ranging, which we already discussed so far, right? The next key component, and I'm going to put it inside the chat for you guys. The next key component is going to be the 8 EMA crossing the 21 EMA that signals a shift in momentum. A retest of structure, price must pull back to a key level for confirmation. Entry with the candlestick confirmation, that's what we're going to be looking at, either engulfing candles, Harami candles, wicks, or momentum shifts. And then we're going to talk about the stop loss and take profit. And that's where the stop loss goes below structure. The take profit goes to the next key level. And as you can see, we've already talked about, the take profit and stop loss level, as the stop loss level on here is going above the 15-minute structure on this candlestick here. And it actually allows us to now be inside a good entry on a trade. Type of 1, if you guys are ready, go ahead and get into the strategy. Awesome. And by the way, guys, if you guys are actually learning from this and you guys are actually having fun with this, please go ahead and tag me on Instagram, bro. Like, if this is giving you a lot of sauce, a lot of insight, like, yo, you really are benefiting from this, I'll definitely appreciate if you guys go ahead and do so. And my Instagram is Jayce Bankz, if you didn't know already. Okay. So right now, right here, this MA, which is the 8 and 21, I'm going to go ahead and actually make sure I have the correct one. Perfect. So when it comes to the 8 and 21 MA, the 21 MA actually allows me to see what is support and resistance. So for instance, on this particular area here, this black line here is going to actually act as support and resistance for me. This green line over here normally acts as the trend if the market is moving in an uptrend or downtrending fashion. Okay. Now, as you can see over here, where there was a cross, there was a momentum shift inside that area there on that cross that actually showed that market may potentially now decide to go ahead and come downwards or push to the downside. Now, the only thing that I need to look at for a confirmation on my end is if this green MA, right, after I already done everything that I'm doing, if this green MA is going to now continue to push back down and still follow a trend of a downtrending market. Now, if I'm inside this trade, right, and let's just say we hit stop loss, which is above here, and the market went ahead and this green area goes above this MA, right? That means that the market is now uptrending once again because of this. And this particular area here will be the support and resistance line that you can actually use when you're finding support and resistance when you're drawing it out too. So this particular black line needs to actually match with areas of support and resistance. It has to line up. All right. Type of 2 of you guys understand that. So you're not using this black line just by itself. You're not using these moving averages just by itself. Like for instance, if I was to go ahead, like how I got my entry point in here, right around by this black line, I'm going to go ahead and just make a red line here so you can be able to see it. Give me 1 second here. The red line. So right around this red line here, you can see that there is some level of resistance. happening. There was a level of support happening. And this black line is actually helping me along with that resistance point to hold this price to continue to push downwards for me. Type of 3 if you guys understand that. The MAs are literally just a bell on the whistle. It's just an extra. It's like, for instance, you drive in a fast car and you just using the MAs to add turbo to a car that's already fast. So you just got to now know when to press that nitro and when to press that turbo, or to use that turbo when you're driving in order for it to really do what you want it to do. Does that make sense to you guys? The moving average that I'm using is the 8 and 21 MA. How do I do this? Perfect. So I'm using the 8 and 21 MA in regards to this. So hopefully, this helped you guys out a lot. So overall, right, this is actually the overall strategy on how I'll go ahead and use this particular trade or do this particular trade. We break everything down with market structure. After we break everything down with market structure, so the black line here is the 21 MA, right? Let me just go ahead and actually list it off for you guys here. The black line, which is the MA cross, is the 21 MA. What acts as support and resistance. The green line, which is 8, is the MA that allows you to see what is the trend at this current time frame on the market. So when it crosses over, right, it shows that there's a shift in momentum, meaning that if market went ahead and crossed over here, and as you can see, market has been pushing upwards here, there was a shift showing that now the momentum is now bullish. Okay. As you can see, there's a cross here on this side here. There's a shift saying that, okay, hey, the momentum is now becoming bearish because it crossed over. It's no longer bullish. Because now this green line is below the black, showing that the market is now in a downtrending market. And then this black line is now acting as resistance because it's above the candlesticks. Type of 1 if you guys understand that. It's just that at this current point in time, ironically, things just happen to work out very well for us at this moment. And the setup was clean here. So we recently just got across. We recently just had an engulfing candlestick on the H1. Now we're seeing that wick entry that actually happening here, even though you had a little bit of a pullback, it actually got stopped by the resistance point, which is over here. It got stopped by the resistance, and it also got stopped by the 21 MA because they're both together. So right now, that was a confluence setup for us. Do you understand? So do you see the power of it actually, but us actually finding that key zone, putting that 8 and 21 where we saw the price cross? We already marked the entry, we already marked the stop loss, we already marked the TP. I also explained to you guys what will make the trade valid or invalid, meaning that if price was to now go ahead and break above this particular area here, it may probably be invalidated invalidate the trade there for you. But right now the setup is very clean. What is the best times to trade GBP JPY? So to me, any form of pairs, right? If the base pair is GBP, it may be better for you to trade it during the London session, but the quote pair is the Japanese yen. So right now, during the Asian session or at this current point in time, the Japanese yen could typically still, move some things around. But it's either between London or Asian. When I was first starting off and I was working my 9 to 5, I used to actually wake up early in the morning with the society members, and I used to have them come on a calls with me at 3-4 o'clock in the morning. We used to do the London section, we used to do GBP JPY, and then once we used to go from there, we will go ahead and actually probably do New York after I come from the gym and after I settle inside the office. I'll do the New York session until like probably 11:30, and then from there we'll go ahead and go about our day. Well, when I'm releasing this recording, I probably may go ahead and release this recording maybe tonight or tomorrow once everything loads up. I'll have to see. But yeah, I will go ahead and actually release this recording here, release a webinar where I show you guys the full entire strategy. But for those that actually came on time and you guys enjoyed it, type of 1 if this actually is being extremely helpful for you guys. Like if you feel as if this, overall breakdown on how I look at the market, overall breakdown on how I actually use this strategy help you out a lot. Like I said, this particular strategy here requires patience, but also an in-depth understanding of what it is that you're doing in structure. We've already broken down everything from the H4 time frame on why I'm doing what I'm doing and how I'm doing what I'm doing to get there. Even like, for instance, here, right? On the H4 candlestick here, you can actually see that market still is trending up. This here line here is still acting as support. This is why you have different take profits. And this is on the H1 time frame where I said, hey, I have micro take profits that I want before I do the overall, overall take profit here. So I already have TP1, TP2, TP3, but this particular move that I found on the H4 time frame is a 120 pip move. I may not want to go ahead and deal with 120 pips move the whole entire way. So I may say, okay, cool. Let me just get my 1-to-1, which is a 30 pip take profit, close out. If I see anything else more than that, I may probably go ahead and do something else later on. But for right now, I'm knowing exactly where I'm at, learning exactly where a market may be pulling back at, or or giving me some form of resistance if I'm trying to sell or anything of those sorts like that. But at least you know exactly now where to be doing your placements and how to go ahead and get that done. One of the things that I believe a lot of these mentors they don't do is they don't really break down as much the strategy or break down as much what is supposed to happen or how is it supposed to happen. And this is why I think people believe that I could kind of see the future. It's not that. It's like, yo, I know exactly what the structures is gonna be. I know these pairs because I studied each and every single aspect of the pair. Like right now, we're talking right now. If any one of you guys decide to take, you know what, I'm gonna go on a leap of faith and I'm gonna take a sell right now, you would have been a side profit. You would have been almost hitting your take profit 1 right now on really live with me. I didn't take the trade because I'm breaking down everything on why, on how I would have founded this trade. But in regards to it, this is pretty much an A+ setup using this 8 and 21 MA. This is the whole entire strategy, A+ setup. Like literally, you cannot even knock it. I broke it down for you bar for bar for bar for bar for bar from start to finish. Look at it, right? I want you guys to actually see what's happening. The same area where I said TP1, look at how close the TP1 was, and then look what happened. There's a rejection. Bar for bar. I'm not, telling you, hey, this is what's going to happen, or this. Like, no, I'm telling you, I know what would happen because we already broke this whole entire thing down. Like, this is not so. Like this, I think this particular strategy, like I said, I've made a lot of money using this strategy. Do I still use this strategy? It all depends on the market conditions and all depends on the pairs. Sometimes I may not get a lot of good movements and stuff, but I may want to actually just find the different change inside momentums. So I may go back to my 8 and 21, or I may go to my 66 and 81 MA, or I may probably just go ahead and just do pure naked market structure trading. I could go ahead and use a buttload of pause or boatload, right? Not buttload, but boatload of strategies, right? To go ahead and get into these trades. You could tell I had a long damn day. But anyway. So I want you guys to really understand this and see this for how powerful it can actually be. The overall goal of this here for you guys to really understand is for you to really, really, really take the time out to really learn your structures, your support and resistance, and look at it for what it is. Okay. So, guys, we're gonna go ahead and chop it up, right? It really has been a pleasure having about 1 hour and 13 with you guys on a call here today. I want to just take the last 15 minutes to just, do a little quick Q&A, talk to you guys. We go over the little key takeaways here today and stuff of that. But as you guys can see, the whole overall setup from start to finish was fire. And we discussed that. So do anybody have any questions? Talk to me about it. If you have a questions, I want you guys to actually type like a 3. I can unmute you, and then we can go ahead and have that question done. Awesome. And that's the whole overall aspect of what I want trading to actually be. I don't want trading to be something that's very, convoluted, very like, oh, I cannot process this or anything of the sort. Like, it needs to just be straightforward and simple. Like, it doesn't have to be all over the place and going here and going there. Like, there's no need for that, you know? And I guess I want you guys to know that, hey, you can definitely go ahead and do this, right? You can definitely go ahead and actually be able to succeed in this capacity and do a lot of great things. Like, sincerely. So, guys, I really want to say I appreciate you guys so much. If you don't have any questions or anything of the sorts like that, I definitely want you guys just to go ahead and shout me on Instagram and before we wrap, after we wrap it up, let me know what's some of the key takeaways here that you saw on the call here. If you really enjoyed it, I will go ahead and try my best to get it uploaded for you guys to actually watch and have. As stated, if you don't have me on Instagram, my Instagram is at Bankz. But I want to go over some key takeaways just for before we wrap it up on this whole Confluence, aspect here. Always create with structure and Confluence. The 8 and 21 MA cross is a momentum shift, not a signal to blindly enter. Understand that patience is key. Wait for price to pull back to the key levels before entering. Okay? And guys, if you have found this valuable, I definitely want to see you guys inside my education platform, BFX Society. You can definitely find it on bfxsociety.com. This is where we take things to the next level. We have live trading sessions, weekly chart work breakdowns. We also have my whole entire Traders Blueprint course there. And we also adding a few other key things beyond trading inside that society. And you guys could definitely go ahead and let me know if we should do this again next week. And if you do actually want us to go ahead and do this next week, drop a fire in the chat down below. That way I can just know how important this may be to you guys. I'm only seeing 2 people drop fires, so I guess it's not really that important. If you guys really want me to go ahead and do this next week, I need to see if you guys really want me to do it. And I'll also want you guys to recommend bringing in a friend and anything of the sorts there. Go ahead and do that, Yeah, I'm trying to catch up. Wait, you guys are moving too fast, man. Dang. I can't even do a recording for you guys. But yeah, we went over that whole entire thing, guys. The 8 and 21 MA moving strategy. You got the 8 and 21 MA, momentum shift strategy. You guys get to have it completely free. I'm gonna go ahead and provide that for you guys. I appreciate all the love. I appreciate y'all tapping in. I want you to go ahead and put this knowledge to work, run it up, have a fantastic week, and let this really work out for you guys in the future. But to all of those guys who are also inside this call here today, I do have a 6-month mentorship program that I'm actually initiating. If you guys want to be a part of that or actually want that, I could definitely go ahead and actually have you guys get vetted to see if you're going to be a good fit. But just to let you guys know, continue to excel, continue to be good, continue to be great. And I may see if I can actually offer a free PDF cheat sheet for this strategy here. like I summarize the strategy in order for you to have. I'll also go ahead and probably add a checklist for you guys to go ahead and do. And what I will go ahead and do is also who all is on this call here today, right? If you can actually find and mark 10 setups this week and share them, like 10 setups this week and share them, and it's based on the 8 and 21 MA strategy, and you're sharing it and tagging me inside these setups, and you can even send it to me in DM, but you tag me on Instagram inside these setups too. I'm gonna go ahead and provide you guys with a free 30-minute one-on-one with me. So that's my challenge for you guys. Put the strategy to work, do the back testing on it, and man, you guys have a great time. So I'm done for today, guys. I'll talk to you soon. Peace.